Hello everyone, welcome to the Statement of Cash Flows. So why the Statement of Cash Flows? This is something I took directly from our text. The Statement of Cash Flows reports a firm's major cash inflows and outflows for a period. It provides useful information about a firm's ability to generate cash from operations, maintain and expand its operating capacity, meet its financial obligations, and pay dividends. Now you're thinking, well, didn't we do this with the other financial statements? Like, why do we need a fourth one? Well, actually we didn't. We didn't really talk about this in the previous financial statements. If we look at the statements that we've done the income statement. What does that show you? It shows revenues, expenses primarily. Then the statement of stockholders' equity, right? That shows you, or statement of retained earnings, whatever you want to call it. That shows you the, the owner's statement, if you will. And what have we made in the past, and what do we pay out in dividends, and so on. And the balance sheet shows us the current balances of all of our different accounts. Now it tells us we do have cash, right? That's on the balance sheet. It's an asset on the balance sheet. But what it doesn't tell me is it doesn't tell me where that cash came from. Did that cash come from operations, meaning earning the money doing whatever it is that we do? Or did I maybe sell a factory in order to have cash? All right. And once we have that cash, what are we doing with it? Are we investing with it? Are we paying out dividends with it? What do we do with the cash we have on hand? Do we have enough to pay our bills? Right? These are the kinds of questions that are primarily addressed through the statement of cash flows. Now you can see some of these things in different places on the statements, but you really can't get a complete picture of cash and where the cash is coming from, going to, except with a statement of cash flows. So that's where we're going to spend our time. We're going to be working on this fourth financial statement. I will tell you, the statement of cash flows is nobody's favorite statement because it's kind of a bear to prepare, but we can do it and we will do it together. All right, so let's see. We're going to move on down here. The three sections of the statement of cash flows. Well, every time we talk about this, we're going to be talking about it in terms of cash inflow and cash outflow. That's how we're going to be looking at things. Cash inflow is cash coming into us. Cash outflow is cash going out. All right, so the first section, this is an experiment here. Oh, look at that. It worked out pretty well. It's the first time I'm using the tools, my tools this way. All right, the operating section. And it's probably the most involved section. And it should be, because what the operating section has in it is it has the day-to-day operations of the business. Okay, so I'm going to steal this from right over here. Is the business making money? Oops, sorry. Is the business making money from its primary operations? Let's see if this works. Ooh, look at that. So it's telling us, whatever it is that we're doing in the business, are we making money doing it? Sorry, hang on a second. Okay. Hopefully that recorded that. We'll see. All right. So this is, this is about our regular business. Are we collecting accounts receivable? Are we paying our bills? Are we buying and selling items in our primary business? Okay, that's the operating section. The next section is the investing section. Type that in there. The investing section. The investing section is usually non-current assets. Are we buying or selling equipment? Are we buying or selling investments? All right, so let's see if I can grab that from over here. I have a cheat sheet on the side. There you go. Not very pretty, but it's showing up. Are we buying and selling buildings and so on? Now, when I'm saying buying and selling investments, I could say maybe, let's say we're not Microsoft, but we have Microsoft stock. That would be considered an investment. Now, if we're buying and selling our own stock, that falls into a different category. That is the financing section. Financing. All right. So with the financing section, that's going to be where we see, are we issuing dividends, right? This is like the debt and equity of the business. I'm trying to copy this. All right, it's the debt and equity of the business. So are we issuing dividends? Are we issuing new bonds? Are we, I think something weird's going to pop up here, let's see. Oh no, okay. Are we selling our own stock? How are we financing the operations of our business outside of, making money, generating cash from our regular operations? Okay, so these are all about us, the financing section. Did we issue dividends? Not did we receive dividends from some sort of investment. More, did we issue dividends to our shareholders? Did we issue bonds, right? Did we pay off a bond? Did we sell stock? All right, did we repurchase our own stock, treasury stock in the stock market? So all of those things fall into the financing activities section. Okay, but where we're going to spend the most time is in the operating activity section, like I said, because that's the most involved piece of this. All right, so real quick little exercise here about why we do the statement of cash flows. Let's see, we get a little, it's a writing exercise, right? It's from your text. If we had this information, let's say we've got two companies, we've got company A and company B. They've got basically the same thing, same sales, same expenses, same net income, cash at the beginning and the end of the year is the same. Companies look identical, right? And that would be information you would get from the income statement or from the balance sheet. There's those little pieces that are shared here. However, if you went with the statement of cash flows, you're going to see different pictures. You're going to see different information. We're going to see, where is the cash being received from? Is it received from the customers? Are we selling assets? Are we paying our money to our suppliers? Are we buying fixed assets? Are we buying investments? So now if you look at companies A and B, if you want to pause it for a second and take a look at this, pause and come back to me. The idea is we would look at this and say, well, look at this company. Company A got most of its cash from its customers. Good for them, right? Company B, less cash from its customers. More that they sold some fixed assets, and that's why they have as much cash as they have. Now, maybe you want to sell a building, but also your concern might be, well, maybe they didn't have enough cash on hands to pay their bills, so maybe they're selling fixed assets, maybe they're selling fixed assets in order to pay our bills. So that's a little bit of a concern there. The other thing you'd see here is, all right, let's look at the cash being paid out. We're paying our suppliers, that's fine, all well and good. But company A is actually investing, right? They're actually buying fixed assets. And they even have a little bit left over to purchase some additional investments. Ooh, okay, there we go. Company B is actually bought a little bit of fixed assets, but they have no leftover money to buy any investments. So even though the picture above looked like they were identical companies, if you look at their data that you'd find on the statement of cash flows, you're going to find a little bit more information showing you that company A is actually really the better company or doing, performing better financially. Okay, so just a little bit what you're going to see there. All right, so if we went down to a quick exercise, let's look at where each of these things would lie. If we were to buy investments, what section would that fall into? Well, an investment would fall, well, if you want, what I think would be smart to do right now is for you to pause and try to figure out, would it be an operating, investing, and financing? So pause. Okay, hopefully you've come back to me after a pause and you figure this out on your own. Purchase of investments. What area would that fall into? Let's see if this will work. Purchase of investments? No, it's not going to let me write on a picture. Okay, so I'll just have to say the words. Oh, wait. I have a pen. Let's see if that'll work. All right, purchase of investments. Where would that fall into? Well, investing would fall in the investing activity section, right? Oh, it's still not going to let me write on the picture. Oh, wait, maybe it will like this. Oh, it is. Okay, there we go. Learning new things. All right. Disposable equipment. Well, you have to think about where equipment lives. Equipment would be not in the operating activity section, but actually in the investing section. So we've got an I here too. Payment for selling expenses. Well, selling expenses is a day-to-day activity, so you're going to find that in the operating section. Collections of accounts receivable. Well, that's also a regular everyday activity, so we're going to put that in the operating section too. Cash sales, day-to-day activity, operating activity section. Issuing bonds. Issuing bonds means you're generating capital, right? You're issuing bonds, you're issuing them out to the world, and the people then are buying your bonds and they're giving you capital. That is a financing activity. All right, my pen worked out. I'm happy. All right, so hopefully I got all those right. Let's keep it moving a little bit along. So what I did for you guys is I grabbed from the book kind of a cheat sheet that you can use as you go through this, right? So it gives you the breakdown on operating activities, investing activities, and financing activities. Okay, so you can use this to refer back to if you're not sure where something goes. Okay, all right. So I'm going to pause this and we'll do video 2 in a second.